Last week, Palantir, the data analytics and AI-powered company, announced a major shift. It's moving its stock listing from the New York Stock Exchange to the Nasdaq. Now, this change is set to take effect on November 26, and the company's shares will still trade under the familiar ticker symbol PLTR. But why this move, and what does it mean for Palantir? To begin with, the Nasdaq is known for its tech-heavy focus, hosting companies like Apple, Microsoft, and Nvidia. So I think by making this switch, Palantir is positioning itself alongside these major players and could even become eligible for the Nasdaq 100 index, which is a prestigious list of the top 100 companies on the Nasdaq. And this eligibility could boost its visibility and attract more institutional investors, which is critical for a company aiming to expand its influence in the world of big data and AI. On a practical level though, moving to the Nasdaq aligns Palantir with a platform that resonates more with tech investors. The Nasdaq's advanced trading technology and its reputation for fostering innovation make it ideal for Palantir's cutting-edge business model. This change also has the potential to increase trading volume and liquidity, which is only going to further drive investor confidence. Which kind of makes sense, as Palantir's stock jumped by about 6% following this announcement. For Palantir though, this is more than just a relocation. It's a strategic move to solidify its tech identity and expand its market reach. And as Palantir continues to evolve, this Nasdaq listing could mark a new chapter in its growth story. But what do you think? You think this is a smart move or just a branding play? In all honesty, I think it could be both. But for me, I of course see this as a smart move, because I believe that this is going to open the door to get even more investors interested in Palantir. And with that, I'll leave you with a video from CNBC discussing this. And look, don't get discouraged by Julie, who's a chief market strategist who talks towards the end of this video. Even though she has experience managing portfolios, I believe what she's saying about Palantir is very short-sighted. But I'll let you be the judge of that. So let's watch the video.
Palantir jumping to a new all-time high today after announcing it will transfer its listing from the New York Stock Exchange to the Nasdaq on November 26. The company also expects that it will meet the eligibility requirements for the Nasdaq 100. Today's 11% pop also rockets it past Vistra Energy, making it the best performer in the S&P 500 so far this year. Nvidia's now all the way down at number 3. But this is a huge jump after lots of huge jumps, particularly after its last earnings report.
Yeah, believe it or not, I actually nibbled a little bit more today to a position I've been long, and I can't justify the valuation at all. It's probably 35 times sales. It trades probably 2 times. Brent Hill, I'm looking at his note here. He says it trades 2 times what CrowdStrike trades at. So in terms of a multiple, in terms of a sales multiple. So I think it's a combination of the success they have going here. We're talking about, 3, maybe 4, maybe even 5 successive quarters where they've shown pretty incredible growth. That's part of the story here. Part of it also is truly where they seem to have the inside track on some of the choicest contracts in the world. And I do mean the government contracts. And I do mean the sense is that these are also some of the smartest guys in the room. So I hate the multiple. I've been longing the name for some time. I actually traded out of it a little bit after second quarter earnings and lamented every bit of that. And I've been trying to get myself back to where I was.
Yeah, well, they're getting 2 index boosts, right? Because it was added to the S&P 500 in September and now to the Nasdaq 100. So there's a little bit of just the technical aspect of the run, Julie, but there's also the huge fundamental government contracts to mention, huge, but also the unrelenting demand for AI, which is what Alex Karp, the CEO, has talked about. I mean, that's a big part of this.
Yeah, I think that's the narrative around that for everyone who missed out on NVIDIA. Everyone is looking for the opportunities around AI that have been overlooked, and this no longer is one of those plays. I would argue that there are probably plays that are better for AI than this. But what I think is, in the note that, Tim was referencing is in this valuation embedded is that this company can grow for several years at 40%, which is an acceleration from where it is right now, and still hold a 12 times sales multiple, which is high. That's a lot of good news that's priced in there. And so it's hard to feel confident saying, yeah, I would recommend stepping into this right now.
I'm in the Julie Beal camp on this one as well. Let's think about what didn't come up? The Department of Government Efficiency, DOGE, didn't come up here. 56% of their revenues is from the government. Do we think that revenue is going up or down or getting haggled? Do we have a person like Elon Musk who is a tech-savvy
where they're
guy.
going to be cutting, though? I mean, I would think, if anything, that's an area where Doge would say, hey, wave some more in.
Or maybe you're doing it for X, and maybe you've got to do it for X minus 20%. I don't know. It's just something. Things look pretty peachy when I look at the chart and all the aspects of it. That would be the headwind I'd be worrying about.
No, I agree. I mean, I don't know that it's, just the math. I can't get around. There's a lot of things where I can't get to the math, and it ended up being great at every step of the way. But this is one that's, I mean, if you want to do the value play, NVIDIA, I guess, relative to this. So that's where I am.